guys, what's going on? It's CJ Investing here. Welcome back to my channel. And today I just want to do a short video just talk to you guys a little bit, you know, what I bought in the market today and what I'm going to be buying in the future, my whole outlook on the market, and just tell y'all what's going on. So without further ado, before I get into it, I need y'all to like, comment, subscribe to get more of this stuff in your algorithm if you like this type of stuff. Also to subscribe to help me reach 100 subscribers by the end of December 2023. And I just want to say ahead of time, I appreciate y'all, I love y'all, and just continue to do y'all thing out there in the market with y'all investments. Good luck with y'all investments, by the way. So actually, I just got off from work. I work for Nature's Own Flowers Foods, baker company. You know, like the breads, like Nature's Own, stuff like that. But I'm actually at home. But getting right into it, I thought I'd tell you a little bit about myself. I'm headed to the gym as well. Because you know health is wealth. I encourage all of y'all to go out there and to be the best versions of yourselves. Just to motivate the people around you to be the best versions of themselves as well. Whether it be investing, out there grinding in the work field, or in the weight room lifting weights. So there's that. And as far as my market moves, my moves in the market today, I just bought some CVS stock. The reason that I've been buying CVS stock so much is not only because it's down. I said I would buy under $70. It's at $69 as of this recording. The market is still open on Friday. What's the date? The 23rd? Yeah, I think it's Friday, June 23rd. That's when I'm recording this right now. So, getting right into it. Like I said, I purchased CVS, and you know, I just really believe in that company. I needed more exposure in the healthcare, retail sector of the industry because I've been heavy. I don't know if y'all know, but I've been heavy in the finance industry as well as in the tech field, in the technology field. Like I've been heavy on stocks like Visa, T. Rowe Price, Qualcomm. So I'm just trying to diversify a little bit because that's not my strong point. You know, I tend to buy things that I really love and to buy a whole lot of that. I either go all the way this way or all the way this way. But you know, to my point, they're really great companies, great dividend paying companies, great cash flow, free cash flow, very little to no debt on their balance sheets, decent ROIC, double digits, you know, return on capital invested. That's what that stands for, if you didn't know. But and they all tend to have decent margins with the exception of CVS, which I just bought today. But I don't really buy CVS for its margins. I know its margins are kind of that's kind of normal for the industry, for the company to have low margins. Walgreens has very low margins. Actually, I think Walgreens is probably in the negative because they're trying to transition their business more into a healthcare type of company like CVS, which has done a great job of branding themselves. You know, they branded as CVS Health. What's the first thing that they do? They put that pharmacy. They put that pharmacy in front of you when they're advertising themselves. You know, you see the pharmacy on their signs. they're really popular for their minute clinics and some of their memberships that they have. So CVS is doing a great job of capitalizing off of their clientele, their customers. You know, they have millions signed up for their memberships, and from what I read, they're usually like 10 miles within their customers. So that's a really good thing. They really know their audience, and location is everything. You know, marketing is everything. So that's very important that they understand that, and they're really invested into just growing their business. More so, they're still growing their dividend, which they paused back in 2018 because of the Aetna acquisition, but they got right back to it. I wasn't really worried about that at all, even though I'm a dividend growth investor. I look for that type of thing, but that's not all that I look for when I'm choosing to invest in a company. So another thing, you know, I just believe CVS is a better investment than Walgreens now. I used to own Walgreens, but I transferred the money out to CVS because I believe that was better. They do a great job, like I said, of marketing themselves. They continue to make acquisitions. Like just this year, they made 2 acquisitions, I think, or they completed 2 acquisitions. And what was it? Oak Street Health was one of them, and Signify Health was the other one. I think Oak Street was the slightly bigger deal that they made an acquisition for, around like a little less than 10 billion, and the other one was like 7 or 8 billion or something like that. And they paid for them cash. They're not using debt to finance their acquisitions. They're paying for it. So they're not doing what they did back with Aetna to acquire these companies and grow their business. So if a company is growing its business and they're cutting back on the dividend growth, or they're not growing the dividend for a certain amount of time, and they got a strong business, I make exceptions for it, because that's not everything. You still got to invest into your business and grow your brand as well. And you know, CVS is only getting bigger. It's only gonna grow in the future, and I believe they're further, when they're further down the road, it's gonna be hard for Walgreens to catch up. Even though they're gonna stay competitive with each other. You know, they're literally right across from each other as far as their locations. But CVS is I believe is gonna have the upper hand in that matter. But I didn't want to make this video a whole CVS video. It's just a video where I just want to talk. So another investment that I'm looking at buying more of is T. Rowe Price. I really like that company, and I plan on buying more of it. Right now it's at $105, $106 per share, and I already own it in my Roth IRA. It's probably like my 3rd biggest position, but I really love that company. I talk about the stock in the Discord. There's a Discord chat that I like to discuss stocks with other people, other like-minded people, and even sometimes in the YouTube comments, I like to discuss stocks and just hear other people's thoughts and opinions, and just kind of compare with my own. Maybe get them some insight, maybe get some insight from them. But you know, we all learn and grow together. We all learn from one another, because there's not a single person that knows everything. I don't know everything. Now, I don't think I'm a beginner investor, but I'm definitely not an expert either. It's just, at the end of the day, these are just my thoughts and opinions. This is not financial advice. I'm not a financial advisor. a guy having fun talking about dividend stocks and investing and sharing his own experience, his own thoughts on different investments. So I think I have a lot more to learn. And I just want to grow together with y'all, continue to get better. So yeah, T. Rowe Price, I really like that stock. It's known for having no debt on its balance sheet, virtually no debt. We was talking in the Discord about net outflows. They've been having a lot of net outflows in the recent years, and I was saying that doesn't concern me about T. Rowe Price because I'm a very simple investor. I don't know if y'all know yet. I'm aware of it. I read up on it, on these companies as far as different things like that, but it doesn't concern me as much because I'm focused on dividend growth. That's a big thing. Is dividend track history. I'm focused on if the company has a little amount of debt or no debt, preferably. If they have a decent ROIC, preferably double digits. Things like free cash flow is very important to me. They have to have enough free cash flow, more than enough to cover their dividends and their share repurchases and them paying down their debt. They should have more than enough left over, as well as that should be growing. It should be going like this. It should be going like this. The free cash flow going up over the years. Not doing this, not going down. So, as far as their gross profits as well, I also want to see decent margins, even though that's not the biggest thing, because I know margins vary depending on the industry. But these are some of the things that I normally look for. Usually double-digit margins, unless you're like a healthcare company. That's the exception that I make for it. But usually double-digit margins, things like that, 15, 20%, 25%, in that neighborhood. I'm also looking at T. Rowe Price's competitor, BlackRock. I really love that company. I would have bought it if it was at a decent price over T. Rowe Price. But T. Rowe Price was just too attractive to turn up, when I started the position not too long ago. So, yeah, those are the things that I look for when I'm buying a stock. And I'm looking at BlackRock next. BlackRock owns everything. If you research it, they own the world. They got their hand in all different type of buckets. They own other ETFs. I think they own shares of Berkshire Hathaway. Don't quote me on that. I know they own companies like Apple, Microsoft, the individual companies, but they just own a lot of different stuff. It's a very stable, a very solid company. And I'm surprised they haven't did a stock split by now. Their shares are at like high 600s, low 700s per share. One of the higher companies in the market in terms of that. And I just want to own it one day. It's one of those great companies. They have a great track record of increasing dividends. They have decent margins. Excuse me. And they have high ROIC. And their debt situation is not too bad either. Even though I prefer T. Rowe Price's debt situation over BlackRock's, BlackRock's is by far in no type of debt trouble. So they're in great standings. And they continue to grow the company. go to the dividends. So that's another company I'm looking at. I'm also looking at United Health Group. Like I said before, I love that company. I don't say love, I like it. I like the valuation of it even better. It's like number 2 on my watch list right now in terms of things I want to buy going forward if it stays at these low prices. Gonna be starting a position in it. So I also want to start growing my depositing in my health savings account that I just opened not too long ago. It's a type of medical benefit account that you can, it's like a savings, except you can purchase stocks in it, depending on your broker or your company that you work for. They may offer some. It just depends, you should check out HSAs. They're pretty cool. They're pretty neat, pretty interesting to check out. They kind of work similar to like retirement accounts, except they're more tax advantage than a retirement account if you use it for medical purposes, and you can back up the information, the charges. So I want to start funding that, allocate some of my equity towards that as well, and just continue to fund my Roth IRA. I want to grow that. So I'm curious to know what y'all's investment strategy is, what y'all buying or selling in the market. I prefer buying because I'm a long-term investor, but I'm curious to know y'all thoughts on different type of things. What are y'all seeing right now that's undervalued, maybe that I don't see, and maybe some different sectors, the same sectors? I'm just curious. We could talk about it in the comment section. But I appreciate y'all. I love y'all. I hope y'all keep doing y'all thing. I wish y'all nothing but the best. Good luck with all of y'all's investments. And just continue to be great. I want to thank y'all for watching once again. And stay tuned for the next one. All right. See you next time. Peace.